Hey, it's Clay, and this will be a video chart on ticker symbol CHKE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what it normally you would see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think it's a good job of telling the quote-unquote story of the price, and then just make summarizing this price action pretty straightforward. And we say, Clay, look, summarize today's price movement. This thing is a pump and dump on thin ice. Now, when I say pump and dump, I don't mean anything about the company. I don't know anything about the company. I'm making that statement based on how the price acted, hence price action. And my definition of a pump and dump, I'll get to the thin ice point here in a little bit, but pump and dump, price makes a great move, and then within a relatively short amount of time, the price goes back to where it started, or in some cases lower. So let's kind of just establish some context. And the key breakout here that occurred was getting up above 92 cents. You know, if you take a quick trip down memory lane, you can see that right there, the price tried to get above 92 cents was rejected. And then other than that, the price was just flat out, trapped below 92 cents. That's nothing, that's pretty straightforward. So that is, in technical jargon, the breakout point. Let's go through the definition. Price makes a really nice move. Well, we just established it started there on the breakout, and it went all the way up there. I'm thinking we can all agree that was a really nice move. Second part of the definition, within a relatively short amount of time. Considering this all happened in one single day, once again, I'm thinking we can all agree that did happen in a short amount of time. And then the final part of the definition, the price goes back to where it started, or in some cases lower. Now, this is where the thin ice comes into play, because to be fair to the bulls, the price could come down here to the thin ice point at 92 cents, go sideways, and then start to work its way back upwards. And in that situation, what would you have? Well, you'd have a set of lows right here. You'd have these lows down there. If you picture each of these as stair steps, then yeah, big picture wise, you would technically still have stair steps progressing in the upwards direction. On the flip side of things, though, if the price comes down here, walks along that thin ice point, and then cracks to the downside, at that point, you literally have the price right back to where it all started, which, not to insult your intelligence, but that's not what a truly strong move does, right? It's going to make progress. It's not going to go back to where it was. So 92 is definitely that key level, where it's kind of telling us, is the price making progress, quote unquote, which would be bullish, or is the price, quote unquote, going back, which is that bearish situation. So yeah, going into next week, keep an eye on 92 cents. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now, and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.